Hey everybody, welcome back to another video. Second upload of the day. I'm moving next week actually. I'm going to stay in my same apartment complex, but I'm going to move to a different unit. So I probably won't be uploading like normal this next week, but hopefully I'll still be able to upload a little bit. Just going to be very, very busy with work and with moving, and I have friends visiting out of town, so going to be very busy. But I'm hoping I'll be able to make some uploads. But I made this video. I want to make one more video today to just really drive home the point of my last video. So if you haven't seen my last video yet, check it out. I respond to some YouTube comments and I talk about the biggest update and most important update to the change of my plan. So this is basically a screenshot of it right here. Um, it's about focusing mainly on the key levels, about avoiding no man's land. And by focusing on the key levels, we're just trading at, I call that trading at a good location. We can't trade in chop. We can't trade right after a move in our direction. When price is overextended, we have to wait for the move. Market is cycles between contracting and expanding. And after it expands, it contracts. It pulls back. It consolidates. So we have to wait. We want to trade with the trend, but after a move in our favor, like with the trend, we got to wait a little bit. So inside the daily bars, I got to be really careful. I got to make sure I'm only trading with the trend. If like at the bottom of the range, trade with the trend. Focus on what happens at these key levels on the hourly chart. I want to trade based off the hourly levels, right? Because this is where the big guys step in and really move the market. I don't want to trade in this choppy bullshit. I don't want to trade in this choppy bullshit. I only want to trade at the bottom of this choppy bullshit because it comes down and it sets like a low here, but this is a range, right? And so from here we go up, and we don't go up a lot. We go up, still like 15 points, and that's a pretty decent move. We don't really want to take trade the top of this because we're in an uptrend on the daily, right? So it's dangerous to trade the top of this range, but if we see a big turnaround at this point, maybe you can take it down for a little bit. But the point is we want to trade on the outside of the daily range because that's where the price action is cleaner, it moves better. That's what we want to focus on. And inside the range, we have to be very careful because this is very no man's landy. It's like no World War One. You don't know. It doesn't matter what side you're on. You're not good in no man's land. So I wanted to show screenshot. These are screenshots from a lot of my previous days of trading, and I just wanted to talk about them randomly, real quick. Just go to a random one, and just talk about it. Again, look right here. Bad time to trade. No man's land in a range. This is actually a pretty good entry signal right here. We're near the top of the range. We could expect to move to the bottom. This would have been a good, if I would have just held this and stuck with it, hold for the sell-off and target the bottom. Because this is, a consolidation, and with bearish confirmation, this would have been a really good trade to hold. But this trade, not really that great to go long here. I tried going short here, but I didn't have confirmation. So that's a bad move. Went long here in one, it looks like. But yeah, I just wanted to I want to find charts that have like the entire day on them so we can just analyze. Here we are in, this is lasted this is like a week long range. This is tough. But if you traded near the bottom of the range, once you saw a turnaround, man, it really seems to run up quite a bit. look at this hourly. After this big push down, we get a doji candle, a big run up. Um, Big run up here. Looks like. Looks like it's not really captured, but I came in here. I wanted to prove a point about just looking at historical charts and showing how things would change. But okay, yeah, here's a PPI. Looks like from a gap and go outside bar. So we gapped up, and it just moved all day up. We had a wow, what a big move. These are in man. So this is like a wow, hundreds of points today, hundreds of points. Or 820 up to 120. Yeah, 300 points right there. That's huge. And look, it's way outside the ranges, so we'd want to let it consolidate a bit and wait for the EMAs to catch up. But once the moving averages catch up, look what happens. And I did actually win on this day. That's great. But man, I could have won a lot bigger if I just held all day. These are the types of moves you just want to walk away from, or set levels, and just stay away. You don't want to get in the way of your own success, which it looks like I did today. How could you have entered here? I mean, this isn't a confirmation buy, but it's at the bottom of the range. It's pretty decent. I'm okay with you. I want to wait for confirmation, right? So this is like the best confirmation bar. This is good confirmation here. I would have been stopped out, but this is good confirmation because the EMAs have caught up. This is probably the best confirmation right here, and you just want to hold this all day. More confirmation, more confirmation, more confirmation, more confirmation. And then we extend up. This is called an exhaustion move, where we get, big push bars after we've already been moving up. So I think selling after exhaustion is good. Then you can just wait for another pullback. And look, you don't really have, it kind of ranges for the rest of the day, so this isn't really good to trade. But if we would have gotten in down here around 900 and held it up till exhaustion, that's 150 points. It's pretty damn good. Pretty damn good. And let's just keep looking. I just want to find examples. Let's look at Friday's chart actually, because I don't want this video to last too long. I just want to drive home the point of how can we trade this. So we gap way up. So we could expect a mean reversion type trade. But not after this bar, because this is kind of a bullish bar, and then this is a doji. But then we see this bar, and this bar is okay, we can get short. But what would happen? Let me zoom in and make this bigger. We put in our short entry bar. It doesn't get filled. Then we get this bar, bar 4. We could sell below this limit. We get filled here at 880, and we push down to this EMA, 15 points easy. One ES contract, that's $750. But say you held and you were targeting the 21 moving average, that's 25 points. That's $1,250. That's really, really good. This isn't a really good bar, and we're getting down closer to the range. We're inside yesterday's range now, and we're in an uptrend, so we don't probably want to take anything here really. If anything, we would maybe try and start looking for a bounce off of this bar. So maybe you just target up here, and look, you get filled here, 10 points. 10 points is a good win, and that's in 5 minutes. That's $500 more. Well, we don't want to trade after really a big move. This would be a good counter trend scalp, but then it keeps going down, and then we get to bar. We kind of get some confirmation here. Bar 13. It's at the bottom of the range. It's at the key level. The overall trend is bullish, so this is kind of a good confirmation bar. Then we get another really good one, bar 14. Sorry, bar 13 and bar 14. And we put the limit order above here. We get filled. This is a 10 point bar. That's pretty big. But let's say we get filled there. We just want to target up here. 14 points. $700. And then you get this bar, and it's like kind of at the top of the range. So you could, I wouldn't do it. Well, actually, no. At this point, we're probably thinking bearish because of this big push down, and it comes up and does this at the top of the range. So here, you could sell below the close of this bar and target right here because this is like where it turns up. Get in at 750, sell down to there. 15 points. Well, now we're at the bottom of the range again, and we have confirmation. So now we want to just flip the script again. And just, this is what's going to be really profitable with trading ranges, is just back and forth, back and forth. Another confirmation to go down. Sell below this. It pushes down. Another bearish confirmation bar. Then we get confirmation up. So at this point, it's like, okay, let's put our stop loss here and sell and take a small profit, because you would get like a 1 point out of this, and then maybe it doesn't get filled, maybe it goes back down. But after bar 36 is consolidation near the top of the range. We're in a bullish market environment. We're still above the 9 EMA on the daily. So at this point, it's like we're thinking, even though we're at the top of the range, it makes sense. We're at a key level. We're getting acceptance at a key level. It makes sense that we could go up from here. Well, what happens? You put the buy order above here, or say you don't realize on bar 36, you realize on bar 37, you put the buy order above here. Boom, right to the top of the Keltner channel, 10 more points. And at this point, it comes down. This isn't great time to buy because it's still, we're so high up. But yeah, I guess you could buy this. This isn't really a good entry bar. This isn't really good entry bar because it's so big. These are better entry bars. We're below the range. We've made higher lows. You could ride this up, get another 10 points. So what's the deal? This is ES. What's the deal with all these trades? Well, all the decisions are made near or at the key levels. The decision to get long is made at the prior day close. The decision to get short is after the rejection at prior day high. Decision to get long again is a double bottom area. Right where we got long before, buyers stepped back in. Same with the decision to get short. Though I wouldn't really think getting short here is a good idea after we push down, push up, tried to make another push down, couldn't make a new low. At this point, I would probably be thinking, probably shouldn't go for a short here. But I guess you could go for a short little 1R scalp, 2R scalp, and try and go back down to the moving average. But that's just me. This is hindsight, this decision. I don't think really going short here is a good idea. Going long here is a good idea, and just targeting the Keltner channel. And by this point, you should just be done because it's a Friday and most of the big move has happened. But if you did keep trading, we did drift up quite a bit for the rest of the day. If you got in bar 58, this confirmation, get in at 75, man, it goes all the way up to 580. So that's 25 points. Even if you just targeted the top of the Keltner channel, that's still 10 points. And we come up, we flag here for a while. And yeah, we kind of get confirmation here. Yeah, this would have probably stopped us out, but then we get another confirmation here on bar 70, and we just accelerate for the rest of the day up. So yeah, the key is but at this point we're outside of the day's range. It definitely looks bullish. We consolidated at the top of the prior day high and got confirmation off prior day high. So the key is I'm thinking about the levels because there's lots of confirmation and entry bars Like, this is a confirmation bar or an entry bar. This is an entry bar. Bar 43 is an entry bar. But it's not at a good location because it's kind of overextended quite a bit. The good confirmation comes at the key levels, whether it's an acceptance or a rejection. And this wouldn't really be that great of an... This is like, say this bar was flipped and it was a hammer up. Would that be a confirmation to the upside? I don't really think so, because it's after all of this, and it makes sense that it would range a little bit. Like, after a big move like this, we expect to range a little bit. We don't want to trade after the expansion, really, too much. I mean, we can, but we don't want to like look for a big continuation. This was like a great short opportunity here because of how big the gap up was, and there was a big mean reversion. But yeah, we really just want to focus on making decisions at the key levels, and it's easier to see on the 15-minute too. And what I'm gonna do actually is I'll probably start setting timers, and so I can kind of disappear and focus on other stuff when we're not at the key levels. So that is my video for the day, or my second video for the day. I just wanted to really make some more analysis and actually not just talk about, like, in theory what my plan is, but actually get into the charts, look at some charts, look at some historical charts, look at last Friday's chart, and just talk about how my new plan could apply. Now, obviously, it's super easy to do what I just did in hindsight. It's a lot harder in the moment to make these decisions, but the key is I'm making them at the levels where you're more likely to get that follow through, whether it's 10 to 15 points or whether it's 25 points, like at the end or at the start. I'm making the decisions at key levels. I'm not making them in no man's land. I'm not making them here. I'm not making them here. I'm not making them up here. I'm making them at the key levels or near the key levels. So that's it, guys. That's my video. This would not be a good long because it's after a big short. We want to see some pause consolidation, which we do here on these two bars. It's short, but it's there. And yeah, I guess you could argue this is at a key level, and yeah, you could take this long up. But yeah, key levels, that's where I'm going to make my decisions. That's where we're going to get the big follow through. I'm going to focus on taking 2 to 4 great trades a day. That's it, guys. Wish me luck. Thank you for watching. I hope this is helpful. This is how I'm going to start looking at the markets. You know, we'll see what happens tomorrow on Monday, October 7th. We had a kind of a expansion move, so maybe this will continue, but we're kind of in a big daily range, it looks like. We'll see. I mean, is this like a big 100-point range? It might be on the daily. Kind of missed out Friday, but there's going to be plenty of more opportunities to come, so yeah, we'll see. But yeah, thank you for watching. I'll see you in the next video. Probably not really many videos this next week, but week after, Tuesday, October 15th is probably when I'll start uploading regularly again. Once I'm moved in, once my friends have come and gone, once, yeah, we'll see. But I'll try and make some videos. So thank you for watching, and I'll see you at the next one. Peace.